This is Matthew Cratter from Trade University, and today I want to answer the question, can the IRS seize your Bitcoin? This is a question that's come up a lot, so I thought I'd make a video about it today. First of all, I want to start by saying none of this should be construed as tax advice, investment advice, or anything like that. Be sure to consult a tax professional and or a registered investment advisor before doing anything. Also, obey your local and federal laws and don't do anything stupid. So in the US, we have something called KYC, Know Your Customer, where brokerages, whether they're stockbrokers or cryptocurrency exchanges or brokers, they need to collect personal information about every customer, whether it's a US resident or non-resident. You have to give your name, address, social security number, birth date, all this personal information. And this is true whether you buy your Bitcoin at Gemini, Kraken, Coinbase, any of these companies. Now, once you've given them all your personal information, it's highly likely that they report this information directly to the IRS, especially in the past year or so. I've seen numbers, something like if you do more than $20,000 worth of trading in and out, the IRS will issue the company like Coinbase will issue a 1099. Either way, whether you actually get a 1099 or not, you can be sure that they're storing a list of all your transactions, all your trades, and linking it with your personal data. And whether voluntarily or involuntarily, they will be providing this information to the U.S. federal government. Here's an article even back from 2016. This is from the U.S. Department of Justice, talking about how they served a John Doe summons on Coinbase, seeking information about U.S. taxpayers who traded cryptocurrency, bought or sold cryptocurrency from 2013 to 2015. So this goes back quite a bit. Something similar for Kraken. This was from May of this year, seeking people who conducted the equivalent of $20,000 in crypto between 2016 and 2020. So even if you had a $1,000 account, you traded in and out 20 times, you may fall under this umbrella. As if that weren't enough, on tax returns, I think since 2019, so since last year, and then this year as well, as of the 2020 tax year, which completed last December, there's now a space as well, really prominently right under your name, address, etc., right here saying at any time during 2020, did you sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? This is a question that definitely needs to be answered honestly. If you lie about this and Coinbase or Kraken or Gemini contradict your story, you've committed perjury on your tax return. So the U.S. government is quite aware of what's going on. They're trying to track it. Right now, cryptocurrency is taxed as property. It's not taxed as currency. There are no real taxes on currency per se, at least in the U.S. And again, this video is mainly dealing with U.S. tax law. Cryptocurrency, Bitcoin is treated as property in the U.S. If you buy $10,000 worth of Bitcoin, you sell it for $50,000, you have $40,000 worth of capital gains tax, and you may owe that at the short-term cap gains tax rate or the long-term cap gains tax rate. Be sure to consult a tax professional to be sure, but that's roughly how it works. So it's taxed very similarly to stocks, whether you hold your Bitcoin less than a year or more than a year. They're different tax rates. Now, before I go into whether the IRS can seize your Bitcoin, just wanted to ask you, if you're finding this video helpful so far, to be sure to hit that subscribe and like button. Also share this video with a few friends. Now, the tax law surrounding cryptocurrency and Bitcoin in the US is actually quite severe still. If you spend any Bitcoin, technically you owe capital gains tax on it if you have any appreciation in that. So if you bought $10 worth of Bitcoin, it appreciated to $20, and then you use that $20 worth of Bitcoin to buy a gift card on Bitrefill, technically you owe cap gains tax whenever you spend Bitcoin as well. If you use Bitcoin to buy a car or a house, technically you would owe cap gains tax because the Bitcoin is leaving your possession at that point. This extends obviously to all the different cryptocurrencies, and it's much more insidious and widespread than you may believe. So if you buy an NFT, this is I believe the most expensive NFT by Beeple. It sold for, I think, $63 million. If you use your Ethereum to buy an NFT, whether it's a $50 million NFT or a $5 NFT, technically you owe taxes on that as well, especially if the Ethereum has appreciated. So be aware of this. Even I've heard a lot of people say if you convert your Bitcoin, if you sell your Bitcoin for USDC stable coins or Tether USDT, that you somehow won't owe taxes. This is just simply not true, especially if you do it on an exchange. Whenever you exit one cryptocurrency and enter another, technically, I believe that's a taxable event. Again, be sure to consult a tax advisor to be sure. Now we really come to the meat of the story. These articles from May of 2021 where the IRS is coming out saying that they will seize your crypto assets on a failure to pay U.S. taxes in a similar way that they might seize other property. They might seize your car or your house, or they might freeze your bank account to pay back taxes. This is somewhat true and somewhat not true. There's some nuance involved to it. Let's just say that no one can seize your Bitcoin unless they know your private key. The President of the United States cannot. The IRS cannot. No one can take your Bitcoin, in other words, have the ability to move it around unless they know your private key. Now, if you leave your Bitcoin or other cryptocurrency on any exchange like Coinbase, Kraken, Gemini, any exchange really, you are not holding your own private keys. You're relying on the exchange to hold your private keys. That Bitcoin can be seized. You essentially have an account there that can be frozen at the government's bequest. If you store your Bitcoin private keys in a public place, especially if you store it in the cloud, if you store it on Apple Photos, if you store it in Gmail, if you back up, if you write down your seed word or your private key in Gmail or Evernote or Dropbox, or really anywhere in the cloud, the IRS can force legal access to those servers. And certainly if you spread your private key around online, someone's going to steal your Bitcoin. But even if you sort of hide it in one of these cloud servers, the IRS can force legal access. And once they have your private keys, they can take your Bitcoin. On the other hand, if you store your private keys on a hardware wallet like the Trezor, so you buy your Coinbase using the Strike app, or you buy your Bitcoin using Coinbase or the Strike app, then you withdraw that Bitcoin, hold it on a hardware wallet. The government will know that you bought the Bitcoin because Coinbase is going to tell them, but they will not have access to your Bitcoin. If it's being held on a hardware wallet, basically the hardware wallet doesn't actually store your Bitcoin, it stores your private key. Bitcoin doesn't really move anywhere. It's just assigned to various owners on the blockchain, which is this open ledger that's shared all around the world. What the hardware wallet does is it holds your private keys and allows you to accept more Bitcoin to that wallet and also to send Bitcoin anywhere you want. And your hardware wallet doesn't really touch the internet. It's usually plugged in through a USB port. And in this way, it's the most secure way of storing your Bitcoin. I also highly recommend using a multi-signature solution, also called multi-sig, where you use multiple keys to secure your Bitcoin. And I have a couple of videos about that as well. But if you store your private key on your own hardware wallet and you don't leave that laying on a restaurant table, and if you securely store your recovery seed, which is a backup of your hardware wallet, no one in the world can seize it without your showing them your private keys. Now, obviously, depending where you live, armed men with guns can come to your house and put a gun to your head. At this point, I imagine most people will share their private keys. But if you don't share your private keys, they can kill you and they'll never get your Bitcoin. So there really is no way for the IRS. This is bluffing. They can only seize your Bitcoin if you leave it on an exchange or if you're really stupid with your private key. This is what happened to these pipeline hackers who use ransomware. This was DarkSide that used ransomware to try to get some Bitcoin. And the FBI supposedly in the news headlines hacked Bitcoin to take their Bitcoin back. The FBI did not hack Bitcoin. What the FBI did was get access to a cloud server where these hackers were storing their private key. This makes me think that this was probably a false flag event to begin with, because anyone who's sophisticated enough to do a ransomware attack like this should probably understand that you don't store your private keys, your Bitcoin private keys, in the cloud anywhere where it can be accessed, especially by groups like the FBI that have access to companies like Palantir Software, for example, very sophisticated software to track you down. Now, Bitcoin is very unique in this way. If you hold your wealth in something like stablecoins like USDC, these can be frozen. And here's a perfect example where law enforcement requested the freezing of $100,000 worth of USDC. Likewise, Ethereum has rolled back the chain before during the DAO hack, for example. These are much different from Bitcoin. Bitcoin is much, much more secure. No one controls it in the same way that you have a few insiders that control Ethereum and they control stable coins like USDC. So when you're choosing where to store your wealth, keep in mind that you want something that's completely decentralized and that has the highest security, which is what Bitcoin has because of its proof of work consensus mechanism. This brings us to the to the meme. What happens if you lose your private keys in a boating accident? This is sort of a gray zone, but we have to feel sorry for people who own tens of millions of dollars worth of Bitcoin or hundreds of millions, and then those keys are tragically lost in a boating accident, and unfortunately they don't have access to it anymore and cannot pay taxes on it. This could happen to anyone, so be very careful that you don't accidentally drop your private keys overboard while fishing, or you might not be able to pay taxes on it, and that would be a really sad thing. Personally, if I ever sell any Bitcoin, which is highly unlikely, I would only sell it in an emergency if I needed to pay some bills. If I ever sell any Bitcoin, I personally plan on paying all my federal, state, and local taxes. My Bitcoin private keys are not going to be lost in a boating accident because I don't like dangling them over the side of a boat. But there is a much better tax strategy, and this is the one that I'm going to use, which is really never to sell your Bitcoin, but instead to borrow against your Bitcoin. I do talk about that in this video here, how to take out loans that are collateralized by Bitcoin. And you can even sell a little bit of your Bitcoin to pay the interest on these loans. So this is a very nice way to never have to pay taxes on your Bitcoin, at least under current tax law, and to keep it with the upside while still enjoying the fruits of your investments. You could borrow against your Bitcoin, buy a nice house, and at that point you own a house and you still have your Bitcoin and you've got upside exposure to both, which is especially nice when you have central banks like the Fed doing so much money printing. Finally, it's important to realize that if you're really looking out generations and generations, you will not owe taxes if you out-hodl the IRS. At some point, the IRS, the US Treasury, all of these corrupt, disgusting institutions will all be nothing more than chapters in American history books. Bitcoin will outlast the US government and will outlast the American empire. It's much more anti-fragile. Current financial system, as well as the US government, is highly, highly levered and highly fragile. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.